Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 May-June Paper 2-2 question number 1. This is paper 2, which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit for this paper is 1 hour and 45 minutes. Since question number 1 is of 30 marks, ideally you should be spending about 35 minutes in order to complete this question. And in this video as well, we'll be attempting to solve this question under 35 minutes. So without any further delay, let's get started. Zahid owns a small retail business. He has not maintained a full set of accounting records. Zahid supplied the following information for the year ended 31st December 2023. All sales were made on a cash basis and cash sales totaled 195,000. It means that 195,000 is the total sales in this case. All goods were sold with a markup of 50%. For the first part, we need to calculate the gross profit of the business for the year ended 31st December 2023. In this case, we have the sales as well as a markup. And always remember that markup is applied to the cost, or in this case, the cost of sales, in order to get the value for the total sales. So the formula will be sales will be equal to the cost of sales times 1 plus the markup rate. So let's substitute the values. We have the sales value to be of 195,000. We're trying to figure out the cost of sales. And the rate of markup is 50%. This gives the cost of sales to be 195,000 divided by 1 plus 50%, which is 130,000. But we need to calculate the gross profit. And the formula for gross profit is sales minus cost of sales. So we already have the sales of 195,000. We just calculated our cost of sales to be 130,000. This results in the gross profit to have the value of 65,000. That is all for the first part. Let's move to the additional information. The following information is also available. We have been given the information regarding inventory and trade payables at the start of the year as well as the end of the year. Then all purchases were made on credit. It means that total purchases will be equal to credit purchases. We are also told that the trade suppliers were paid 134,240 after deducting cash discounts totaling 560. So this is the amount that we paid to the suppliers during the year, and this amount is the discounts received. Zahid took goods for his own use during the year. However, no record was made of the value of these goods. Alright. Now for the second part, we need to calculate for the year ended 31st December 2023, the purchases. Remember that all purchases were made on credit, and whenever we have to calculate the credit purchases, you always need to prepare your purchases ledger control account. Let's do so. Purchases ledger control account is prepared in order to get our value for trade payables. And in this case, we have been given the balance for the trade payables at the beginning of the year as well as the end of the year. And remember, trade payables is a liability, which means that the opening balance will always be recorded on the credit side. So in this case, we will record 13,500 as the opening balance on the credit side. The major thing that will increase the trade payables will be our credit purchases, and that will always be recorded on the credit side. And this is the value that we're trying to calculate in this case. Then we have been given the amount that we paid to the suppliers during the year. If we pay back to the supplier, it means that our trade payables amount will now decrease. So this amount will always be recorded on the debit side. So that is 134,240. Which will be paid out of the bank account to the supplier. Then we also have discounts received, which will definitely reduce our trade payable. So this should also be recorded on the debit side. So we have 560 as the discount received. Then we have been given the closing balance as well. Since the opening balance was recorded on the credit side, the closing balance will now be recorded on the debit side. And the value was 15,600. We will now calculate the total of our debit side, so that will be 134,240 plus 560 plus 15,600, which results in 150,400. That will be our total on the credit side as well. Now, in order to calculate our credit purchases, we just need to subtract this value from the total. So that is 150,400 minus 13,500, which results in 136,900. That is all for purchases. Now we need to calculate the value of goods taken for own use by Zahid. So whenever there is value of goods taken for own use by any owner, that will always be recorded within the cost of sales. So in this case, we can just utilize the formula for cost of sales. So cost of sales will include the opening inventory. Then we'll add the purchases. We subtract the purchases returns, but in this case, we do not have any information regarding it, so we can skip it for now. Then we are to calculate the value of goods taken for own use. That will always be subtracted within cost of sales. So minus goods taken for own use. And we also subtract the closing inventory. Now we will just substitute the values. We've already calculated the cost of sales in our first part. That was 130,000. Opening inventory is also given within the additional information. That is 16,400. We calculated the purchases in the previous part. That is 136,900. We're trying to calculate the goods taken for own use. And we have been given the value of the closing inventory as well, 22,460. Now we just need to solve the equation. So the goods taken for own use will now be 16,400 plus 136,900 minus 22,460 minus 130,000. This results in the value of 840. That is all for this part. Let's move towards the next question. So we again have additional information. The following information is available for Zahid's business. We have the non-current assets, which had the following values. So these are the carrying values at the start of the year and at the end of the year. During the year ended 31st December 2023, a non-current asset was sold for 5,600. So this is the sales proceeds for that disposed non-current asset, resulting in a profit on disposal of 2,400. Always remember that profit on disposal occurs when the sales proceeds is greater than the net book value, and the formula for profit on disposal is sales proceeds minus the net book value. So let's plug in the value in order to calculate the net book value of the disposed non-current asset. The profit was of 2,400. We have the sales proceeds of 5,600. Now the net book value of the disposed non-current asset will just be 5,600 minus 2,400, which results in the value of 3,200. Additional non-current assets were purchased for 9,200. This is the cost of the additional non-current assets that was purchased during the year. Now, whenever there is non-current asset, we obviously have to calculate the depreciation charge. And in this case, since we do not have any depreciation policy given, we need to use the schedule of non-current asset. I'll just write down the formula here. So for our schedule of non-current asset, we're just going to look at the movement in the value of our non-current asset. We always start with the opening net book value for the non-current assets. We then add the purchases value, and for the purchases, we always add the cost of the new non-current asset that was purchased during the year. Then we need to subtract the disposals, and the disposals should be included at its net book value. It means that we need to include the net book value of the disposed non-current asset. Then we need to subtract the depreciation charge for the year, which will give us the closing net book value. So in this case, we'll use the schedule of non-current asset in order to calculate the depreciation charge for the year. Let's start with the opening net book value, which is given to be 194,000. Then we know that additional non-current assets were purchased for 9,200. So this is the cost of the new non-current assets that was purchased during the year. Then for the disposal, we need to subtract the net book value, which we have calculated to be 3,200. Then we need to subtract the depreciation, which we are looking for, and this will give us the closing net book value of 188,000. So in this case, the depreciation charge for the year will be equal to 194,000 plus 9,200 minus 3,200 minus 188,000. And this results in the value of 12,000. So this is the depreciation charge for the year. Now for the second information, income from rent receivable is given. The rent that we received during the year is 5,360. Then at the opening date, owing to Zahid's business was 280, and at our ending date, we had received 600 in advance. Now we always need to adjust for accruals and prepayments. And the formula for the accruals and prepayment at the opening date and the closing date, if you just remember one of these, you can always figure out the rest of it as well. We always add the closing accruals, which means that we subtract the opening accruals, which also means that we always add the opening prepayment and subtract the closing prepayment. So this is a formula that we need to follow in order to calculate the values for the year after the adjustment of the accruals and prepayments. So in this case, we can see that at the start of the year, we had owing, which is a part of accrual. It means that we need to subtract the 280 to the amount that we actually received during the year, and at the closing date we have advance, which is prepayment. It means that we also need to subtract the 600. So in order to calculate the income from rent receivable for this year, that would be 5,360. We subtract 280, we again subtract 600. This results in the value of 4,480. Then we need to repeat the same process to our expenses as well. For advertising, we can see that at the opening date we have prepaid, which we need to add to this value, and at the closing date we have accrual, which we again need to add. So that will be 490 plus 5,960 plus 610, which results in the value of 7,060. For general expenses, we have the opening accrual, which we need to subtract, plus 8,480. So that will be minus 570 plus 8,480, which results in the value of 7,910. For insurance, we have the opening prepaid, which we need to add to 4,510, and we again have the closing prepaid, which we will subtract. So that will be 330 plus 4,510 minus 390, which results in the value of 4,450. For wages, we start with 12,400, and we have accrual of 470 at the closing date. We always add the closing accruals, so that will be 12,400 plus 470, which results in 12,870. Now we need to prepare and extract from the statement of profit or loss for the year ended 31st December 2023, starting with the gross profits calculated in Part A. We have been given the working section, so whatever workings I did within this information itself, you guys should show this within the box for your workings. Now we start with the gross profit, which we calculated in the first part. So that was 65,000. After gross profit, we always need to add other incomes. So let's start there. And in this case, we had discounts received. That is also an income. So let's start at the top. The value for discounts received was given to be 560. So that is our first income. Then we had been given the profit on disposal. So profit on disposal was of 2,400. And we have income from rent. So those are rent receivable. And in this case, we have calculated the value after the adjustment of accruals and prepayments. That was 4,480. And these are the values that we need to include within our statement of profit or loss. So that's 4,480. That is all for our income. So let's calculate the total. That will be 560 plus 2,400 plus 4,480, which results in 7,440. Now let's calculate the total for our gross profit and other income. That will be 65,000 plus 7,440, which results in 72,440. Now we can move towards expenses. So for expenses as well, we've already adjusted the accruals and prepayments and figured out the values for the year. And we need to include those values within the statement of profit or loss. For advertising, we calculated it to be 7,060. Let's write it down. Then for general expenses, we calculated it to be 7,910. We then calculated it for insurance to be 4,450. We then calculated the wages to be 12,870. Then we've also calculated the depreciation charge for the year to be 12,000. That is all for our expenses, so let's calculate the total. That will be 7,060 plus 7,910 plus 4,450 plus 12,870 plus 12,000, which results in 44,290. Now we can calculate our value for profit for the year. That will be 72,440 minus 44,290, which results in 28,150. That is all for our statement of profit or loss. Let's move towards the next part. We need to explain with reference to an accounting concept why Zahid made adjustments to his income and expenses when preparing the statement of profit or loss. So we always make adjustments to income and expenses for our accruals and prepayments according to the matching concept, so that we can match the expenses that were incurred during the year to the revenue generated in the same accounting period in order to ensure a fair reflection of the profit for the period. Let's write it down. Matching concept is applied to match expenses incurred to the revenue generated in the same accounting period to ensure a fair reflection of the profit for the period. That is all for this part. Let's move towards the next one. We have the additional information. Zahid plans to expand his business. This would mean he would no longer operate as a sole trader. He is considering the following options. Option A is to form a partnership with Talha, who currently owns a similar business. And option B is to form a limited liability company with himself and Talha as shareholders and directors. We now need to advise Zahid which option he should choose. We need to justify our answer by considering both the advantages and the disadvantages of each option. Alright, so in this case, this is of 7 marks. So 1 mark will be reserved for your final decision. Now for the remaining 3 marks, you need to divide it among option A and option B. So for option A, you need to have 3 comments, and either you can write down 2 advantages, 1 disadvantage, or you can write down 1 advantage and 2 disadvantages for each of these options. Let's start with option A. For option A, we're considering forming a partnership with Talha, who currently owns a similar business. So the first advantage would be that a partnership will have more capital compared to a sole trader. And since Tala currently owns a similar business, it means that as a partnership, there will be more expertise available. Let's write it down. So as a partnership business, there will be more capital and expertise available. The second advantage is that there will be shared workload among the partners. Now let's talk about disadvantages. The major disadvantage of moving from a sole trader to a partnership business is the possibility of disagreements, which could lead to slower decision making. Let's write it down. There will be possibility of disagreements, which might lead to slower decision making. Alright, that is all for option A. Let's move towards option B. So option B is to form a limited liability company with himself and Tala as shareholders and directors. Since we are talking about a limited liability company, the major advantage would be that the business will now have a separate legal identity and there will be limited liability for debts of the business. Let's write it down. The business will have a separate legal identity and there will be limited liability for debts of the business. Another advantage is that a limited liability company has access to more finance, since this can raise more capital in the future by issuing shares to the public. Let's write it down. A limited liability company has access to more finance as compared to a partnership. Now let's talk about disadvantages. The major disadvantage would be that setting up a limited liability company will be more complicated and expensive as compared to setting up a partnership business. Let's write it down. Setting up a limited liability company will be more complicated and expensive. Alright, that is all for our comments. Now, based on these comments, we'll have to make a final decision and advise Zahid which option he should choose. And we should also support our decision with another comment. So in this case, I would advise Zahid to go ahead with option B, because as a partner, he would have to bear unlimited liability, whereas as a shareholder, he will have limited liability. Let's write it down. So I would advise Zahid to go ahead with option B, as he would have to bear unlimited liability as a partner, but limited liability as a shareholder. Alright, that is all for question number 1. If you found this video useful, make sure that you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.